sales tax applications and Nexus. Do I need to charge sales tax for my coaching business? The answer to this question depends on where you operate your business, what you sell, and how you sell it. But the simple answer is that if you are in a personal service business like life coaching, in most cases the answer is no. Whether or not you are required to collect sales tax depends on, do I have to collect tax or Nexus? Or if you have Nexus in a state where you operate your business, and or if you have sales beyond the minimum threshold in a state where you have Nexus. The question, is this product taxable, has a few answers. Depends on if you are selling a product or a service. If you sell a digital product, does it include contract with the customer when you do that? Is it taxable? Life or health coaching falls under more general categories of service like training, consulting, and professional services. These types of services are generally not taxed. However, in some states, sales tax is collected on these types of services as well. You can identify which state you have Nexus in below and then research if your service is taxed in that state. However, if you are selling a product such as a book, that it's taxed, even if you are selling it online. More on that later. Again, identify where you have Nexus and look into collecting tax for sales of products in those states. Don't worry though. In most cases, your sales numbers are too low to need to collect sales tax, but one day they may be, hopefully, high enough. Let's talk about digital products. If you're selling a digital product, such as an online course, it may be taxed like a product if it's pre-recorded, automated, or downloadable. This means that if you offer a coaching program, it may not fall under coaching. It may fall under digital products. The question you need to answer is this: does your coaching program include actual coaching with you? If not, it's a product, not a service, and it's taxable. Do you present the course or seminar live in real time? If yes, then it's not taxed. Can the participants connect with each other or with you in real time during the course? If yes, then it's not taxed. Does an actual human evaluate the students? Then, again, it is not taxed. The participant is evaluated by an instructor. Evaluated by an instructor does not include being graded by, scored by, or evaluated by a computer program or an interactive automated method. If your course is pre-recorded, if there is no way for the students to interact with you or each other in real time, then your course is subject to sales tax. Again, this would only be relevant for states in which you have Nexus and meet the minimum thresholds. If you determine that what you sell is taxable, the next step is to identify whether you have to collect taxes for it. This is called having Nexus. But first, it's sales tax charged for online sales. The most common question people have about sales tax is whether or not they have to charge sales tax for items that are sold throughout the internet. The answer is often yes, but only if you have Nexus. First, let's look at why. With the ever-increasing prevalence and preference for e-commerce, it becomes clear that a change to the sales tax laws was imminent. E-commerce has become the primary source for individuals and companies to purchase goods and services. Most companies now have some, if not all, of their business generated through e-commerce, which opened up a much broader customer base, including interstate and international sales. State governments quickly became aware of an ever-growing source of tax revenues that were not being tapped into. In 2018, the U.S. Supreme Court ruled in favor of the state of South Dakota in South Dakota versus Wayfair, Inc., and its decision to allow the state to enforce tax collection from remote sellers. In reaching this decision, the North Dakota Supreme Court overturned its prior decision from 1992 in Quill Corp versus North Dakota, which required retailers to have a physical presence in the state in order for collecting of sales tax to be mandated. This decision stands as a turning point, opening doors for a new era of sales tax and setting off a huge wave of legislation across the country as state governments raced to ride this new public revenue stream. Today, every state with a sales tax has passed their own Wayfair-inspired sales tax laws. If you are doing business in multiple states, it's important to review the sales tax laws in all those states to see if sales tax must be collected for services rendered. Some online sales platforms such as eBay and Poshmark collect sales tax for the seller. If you are selling your goods and services only through your own website, you will need to be aware of sales tax requirements from the states where you are doing business. Most U.S. states, 45 of them, charge a sales tax for online sales. The Streamlined Sales and Use Tax Agreement, SSUTA, aims to standardize U.S. sales tax policy as much as possible. 24 states have adopted the SSUTA guidelines for online courses and webinars, which are as follows: Arkansas, Georgia, Indiana, Iowa, Kansas, Kentucky, Michigan, Minnesota, Nebraska, Nevada, New Jersey, North Carolina, North Dakota, Ohio, Oklahoma, Rhode Island, South Dakota, Tennessee, Vermont, Washington, West Virginia, Wisconsin, Wyoming. I hope I didn't miss any. So let's talk about Nexus. When we talked about registering your business with the authorities, it was previously explained that if you conduct business, you have an office, you have an employee, a warehouse, or any kind of physical presence in another state, then you'll have to register your business as an entity in the state or states in which you have a physical presence. This is called having a physical presence nexus. If you have nexus in a certain state, you are responsible for collecting sales tax there. If you sell to customers in another state, you do not necessarily need to collect sales tax because you do not have nexus there. However, there are other ways you can have nexus in a state, such as making sales to customers who live in other states beyond the minimum threshold. So we'll go through different types of nexus below to help you determine what may apply to your business. First, we have the physical presence nexus. Wherever your business is physically located, you are expected to register for and collect sales tax. Physical nexus can refer to you as a person, to an employee, to an office location, or even to a data server you're using. Just take a few moments to think about how you conduct business to determine if any portion of your business is done in another state. Unless you have an official W-2 employee or another physical location in another state, usually physical nexus only exists in the state where your business resides, which is usually where you live. Then there is the economic nexus. Even if you do not have physical nexus in a state, you may be required to collect sales tax for states where you sell a large number of products or digital goods. If the state does collect sales tax on your type of product and you meet a certain sales threshold, then you would need to collect sales tax for sales to customers in that state. An example of a common threshold is $100,000 in annual sales or 200 separate sales transactions in that particular state. If you reach either of those two, then your business has nexus and it's liable for sales tax there. Exact threshold amounts vary by state, and some have much lower thresholds than that. If you are having enough sales that you think you may reach thresholds in some states, it's worth looking into it further. The future of economic nexus. Confirmed by the South Dakota Supreme Court Warfare decision in 2018, this policy is being implemented in state after state, and it is anticipated that it will eventually become law in every state in the country that collects sales tax. It's designed to make out-of-state businesses responsible for sales tax on customers who reside in that state. So, as an online business with students or clients located anywhere, you should keep your eye on the economic nexus. For example, starting July 1st, 2021, Florida implemented a law that requires retailers selling more than $100,000 a year online will have to start collecting Florida's 6% sales tax at the point of sale. This is different than the other types of nexus requirements, which impose other state sales tax on goods and services. This nexus imposes the home state, in this case Florida, sales tax on goods and services sold to customers in other states. The following additional forms of nexus are not commonly applicable to coaches or related businesses, but they could be for you. They often have similar thresholds to economic nexus, so if you have high sales, make sure that you consider if they may apply to your business. So next we have the affiliate nexus. You have an affiliate nexus if you are affiliated with a business or an individual in the state and you acquire any students, sales, or other forms of business from this connection. Do you use a referral system for your online courses? If that referral system is located in another state, your business could have or would have an affiliate nexus. States that have some version of an affiliate nexus rule are Arkansas, California, Connecticut, Georgia, Illinois, Kansas, Maine, Missouri, Minnesota, New York, and so forth. You can find the whole list in the documents available to you. Many of these states have minimum sales thresholds, so the nexus only applies once you surpass a certain amount of gross sales in a year for your business. Then we have click-through nexus. Similar to affiliate nexus, a click-through nexus exists when your business receives sales through the website of a business located in another state. If you run ads or links on a website that its primary business location in another state, and that link or ad channels potential students and new business to you, this will be considered a click-through nexus. States that have some form of click-through nexus on the books include Arkansas, California, Connecticut, Georgia, Illinois, Kansas, Louisiana, Maine, and so forth. Next, there are web cookies. These few states consider software or web cookies on devices located in their state as a business nexus. These states are only Massachusetts, Connecticut, Rhode Island, and Ohio. In all these cases, the sales thresholds for this nexus are pretty high, meaning that you will have to generate a large volume of sales of goods or digital goods in these states in order for you to be required to pay sales tax on these registrations. So now let's talk about registering and collecting sales tax. After you've worked and you've determined that you actually have nexus in a state and have a taxable product, the process to start collecting sales tax is surprisingly straightforward. Here are 3 simple steps for complying with U.S. sales tax for online courses. First, register for a sales tax permit in that state. You must register for each state's tax system individually. You should visit the State's Department of Revenue website, which you can find a directory of on the IRS website. Another option is to register for the SSUTA states at once using a simple and free online application through the Streamlined Sales Tax Registration System, SSTRS. You can pick and choose which of the 24 states are relevant to your business. Next step is to charge sales tax to customers in that state. If your sales are online through a service like Shopify, for example, there are plugins or apps that are created specifically for this purpose. The amount of sales tax you charge includes the overall state tax rate plus any county or district tax that apply. Not every state has local level taxes though. Typically, the tax rate levied will be based on where the customer is located. This is called a destination-based tax. Several states have origin-based taxes, meaning that you charge tax according to whatever your business is based. The 11 origin-based states are listed in your document, so make sure you take a look at them. California, it's a mixed state. City, county, and state taxes are origin-based, while district sales taxes, supplementary local taxes, are destination-based. Third step, file sales tax returns in that state. When you register, each state will assign you a filing frequency. It could be once a month, once a quarter, or once a year. Be sure to note your deadlines and pay on time to avoid penalties. Again, check the individual state's official websites for specific information on how to file. Now, do you need to collect international sales tax? It is likely that if you are selling services internationally, you have a platform to sell from, and international tax requirements will be levied through the web platform. The threshold of sales required to meet international requirements is high, and you most likely will not reach those thresholds, at least not right away. Also, for many international sales, there is no way to track or submit payment for sales tax. Now, if you sell directly from your website and sell a large amount to customers from specific countries, more research about international tax requirements will be needed. You may want to ask an international e-commerce expert if and when your sales reach the threshold requirements. As an example, if you read on the website for Udemy, the leading online course marketplace, udemy.com/support, it says clearly that Udemy has a legal obligation to collect applicable transaction taxes, including VAT, the value-added tax, GST, the goods and services tax, or other types of sales taxes for purchases, which may vary depending on a student's local, state, and country jurisdictions.